Who decided that things had to change, certainly from an Apollo perspective, right?
So at Apollo, we've been very focused on improving diversity and creating opportunity for several years now. And as we thought about, where can we have direct control right now, our boards was a very obvious place to start. So if you look at the board composition of our controlled companies, you would see much better numbers than you just quoted, thankfully, as a part of a proactive effort. And this comes from the top, all the way to the top, as well as being realization on the part of each individual who's responsible for any given investment. They wanted that investment to go as well as it possibly can. And so how do we make better decisions? How do we improve outcomes? It's very clear that diversity at the board level is a driver of our performance. And for better or worse, when we see an opportunity that's going to make us better, we are definitely going to go after it.
You talk about the diversity of your controlled companies. Obviously, you have the control, you have the leverage to do that. What type of leverage do you have over companies where you don't have the control, over maybe companies that aren't even in your investment universe?
Well, there's a hope that you can lead by example and show the outperformance associated with bringing in a more diverse set of leaders, whether it be at the management level or at the board level. So I think there is an element of that, and people seeing that and continuing along on that path. But fundamentally, when we buy a company, it's that moment of realization. What do we own? What are the company's employment practices? What is the diversity of the workforce? What are the opportunities to engage with that company in a very detailed manner to improve our ESG metrics, something we focus on a lot at Apollo, but also on a very tangible level to say, are we looking at the largest possible swath of talent? And one of the great things to come out of COVID and a more decentralized workforce is you can draw upon talent from different places. And so early innings in terms of actually executing on this, but we see across our portfolio companies a realization that maybe we can branch out of that metropolitan area that happens to be less diverse and find talent across the country, across the world. It's one of the more exciting opportunities.
Joanna, you're talking about your ESG metrics. Now, the Board Diversity Action Alliance that Ursula Burns helps drive is all about the data. It's all about just finding the numbers to highlight how poor they are. ESG is now, from a European perspective, starting to look at actual rules, regulations, ways in which we can measure really how E, how S, how G everything is. How are you measuring it?
So at our firm, we've just released our 12th annual ESG report, and it's publicly available. It's on our website. And it goes through 57 companies. I can't remember the number, but a huge number of data points, and companies covering 300,000 employees. So we have a large portfolio that we are reporting on and proactively looking to have clarity on those figures, improve those figures, and it's a major focus. And when we're underwriting investments, we're looking at ESG at the business, both where we are today and what are the opportunities. And then we have brought into our team, really across the organization, more voices, more people with talent who can help drive ESG outcomes across our business. So a major investment on the part of the firm, a major focus. I mean, the part of the organization I sit within, our impact fund, is builds upon that, but is slightly different because while we still want to make sure that we are mindful of reporting on and improving our ESG factors, we are only investing in companies where what they do, their goods or services, are actually driving change in the world, either socially or environmentally, which is an exciting thing to be a part of.
So what type of companies are, though? Because, I mean, Apollo traditionally, it's investing in more mature companies, let's say. So I would think the challenge there, would it be a little bit more difficult with those types of companies?
That's a reaction we get frequently, is when you see a company that's owned in an impact fund, you expect it to be early stage. You expect it to be kind of venture or growth focused, and the company is less than 10 years old. What we're trying to do is widen the aperture of companies that can be considered for an impact fund and bring impact to scale. We think we can drive a lot of good in the world, both from an impact perspective and in terms of financial returns to our investors, by widening that aperture, looking at more mature businesses, and owning them with a high degree of intentionality around impact.